Hey traders, this is Blake Morrow with Traders Summit, and I have, for the very first time, Mr. Jack Farley from Blockworks. He's also the host of Forward Guidance. It's so good to have you here, Jack.
Great to be here. Thanks for having me, Blake.
My pleasure. And thanks for agreeing to do this. I find, and I know I've told you this personally, one-on-one. I really love your work, and I love listening to your interviews. You do such great, thorough interviews on Blockworks. I spend a lot of time doing analysis for some of our client base, and as a result, when I'm doing analysis, I find myself a lot of times listening to your in-depth interviews with people. You've been doing it now for a few years. Tell us a little bit about what you do at Blockworks.
Thanks. So yeah, I'm the host of a show called Forward Guidance, which is on YouTube on the Blockworks macro channel. It's also released on a podcast, and it's a interview only show. So it's not me sharing my views. I'm interviewing some people who I think are really smart and know a lot about the financial system and how it works, and maybe where things are going. Maybe, and it's focusing a lot on central banks, macroeconomics, inflation, as well as stocks, bonds, stuff like that.
Yeah, and I find them extremely fascinating. Like I said, for me as a technician, predominantly, I'm always focused on charts. So getting more of a macro viewpoint on different asset classes and what they're doing, I find it fascinating. Because it helps me as a trader have a theme to kind of back up what I'm doing from a technical point of view. But also, like I said, I can listen to your interviews in the background, get a lot of knowledge while I'm doing my technical work on the markets. And I think a lot of traders really enjoy that.
Thank you.
So let me ask you this. You originally started your career during college. I guess you were at Bloomberg. Tell us a little bit about what you did there.
Yeah, so I was on the management and planning team. So like making a lot of presentations and working on sort of the user journey, basically how different people use the terminal and how you could make it better. So I gained a lot of familiarity with the Bloomberg Terminal at that internship, and that's actually what got me my first job at a school, because that job was making charts to put in the interview on the video, and I knew how to do that.
That's interesting, and probably one of the more cumbersome and complicated platforms to use in the markets, hands down, I would say. So,
yeah, it is. I feel like I got really familiar with it. It's been because I've now doing my own show for about a year and a half. I haven't used Bloomberg Terminal in a year and a half, so I feel like probably in my head I'm a lot better now than I actually am. I probably have gotten pretty rusty.
So, I wanted to ask you, since having your own show, you interview such dynamic and really, I mean, some of the best minds in the financial industry. And we're, at this point in time, where we are at in, let's just call it May of 2023, we're faced with a lot of issues in the financial markets: inflation, monetary policy ramping up, the rate hikes that we've seen, unprecedented rate hikes, not only from the Federal Reserve, but other central banks as well. I wanted to ask you, based on some of the interviews you've done recently, and maybe some in recent memory anyway, where do you think monetary policy is going, based on some of the analysis and feedback you've heard from the people you've interviewed?
Well, it's a good question. The main sort of base case of the market, if you just look at like short-term interest rate futures, is that the Federal Reserve has reached its terminal rate. There will be no more hikes. Probably, I haven't checked today, but probably market's pricing in like a 20% chance of a June hike. So it seems kind of unlikely that there will be a June hike, and that, where the top range of like 5.25%, we've gone from 0 to 5% or 5.25%. And it's been a pretty remarkably fast journey. Definitely during my lifetime. I mean, the last time things have, it's been pretty remarkable. But yeah, so the market, it's a question of less of how much further will the Fed hike, and when will the first cuts be? And I think a lot of interest rate traders were a little overzealous in pricing in cuts during the summer. A lot of people I talk to think that the Federal Reserve won't start cutting for a while, maybe 2024. you don't know, and it depends on so many things that we also don't know. But I
Right.
would say that don't expect cuts anytime soon would be my sort of takeaway. What do you?
Well, that brings up another point, because I think a lot of the reasoning that we may or may not see cuts anytime soon, or we might start getting cuts sooner rather than later, is based on economic activity, but more importantly, inflation. I know you've probably had many conversations over the course of the last several months with folks that are older than myself. I mean, I can date myself by saying that I've been trading literally for a quarter century now, but I wasn't dealing, even when I jumped into the markets in the mid 90s, we weren't dealing with the inflation that we're dealing with now. So you've probably interviewed a lot of folks that have been around. What's your general sense on where inflation's going from here? Are we going to be going into a deflationary environment, or are you getting the sense that this is going to be more sticky and we're going to see inflation percolate around here for a while?
So deflation is an actual decline in the price level, which is quite rare, and it only happens typically during recessions for a sustained period of time.
Yeah.
So disinflation would be inflation going back to 2%. That's called the disinflation. Deflation would be prices actually going down, which is kind of rare. Inflation right now is like at 4 or 5%, having come down for a little over 8%. And it depends on how you measure it, the time horizon you measure it based on. But yeah, inflation exploded higher in 2022 after steadily increasing in 2021. And the argument about the cause of it really hinges on, is it demand driven or supply driven?
Yeah.
There was a lot of money printing in 2020, despite the sort of incorrect assertions of other people. And that created a lot of demand. But at the same time, supply chains got messed up and they were shut down. So production, and particularly transportation of goods, so you had demand increase and supply go down. The question is, what is the more dominant factor? I think that, it's really kind of ridiculous to remember this, but in 2021 there were people who were saying it was all supply chain issues.
Yeah.
And it's like there was like, oh, the price of lumber, the price of this, the price of this. It's like nails. I mean, people were doing podcasts about nails. Like it's like, the reason we have inflation is not because of supply chain issues in nails. Okay. The price level is generally increasing. And I also think people make a point that has its merits about corporate greed, for lack of a better word, corporate pushing prices higher. But I think that's a constant. I don't think when, in 2013, when inflation was at 2%, corporations weren't not greedy then. It's that they are able to pass along the prices because people have enough money to spend and they want to spend. So I'm big on the demand side. That's just my own sort of belief. I think it's definitely coming down, as I say. And the question is, how much will it come down? I mean, the economy is slowing down, and yeah, we'll see. I don't know.
Yeah, I know it's interesting, and I'm glad you made the distinction between deflation and disinflation. And I think a lot of consumers feel that prices are going to come back to where they were.
No,
which I know, and that's going to be the rub from a consumer point of view, probably in the next 12, 24 months ahead, I think is what we're going to see. We're going to see the rubber meet the road there, if you know what I'm saying. That brings up another question I wanted to ask you, based on some of the people that you talk to. As far as the economy goes, where are most of the people that you're talking to? How are they feeling about not only the U.S. economy, but the global economy, where we stand right now and where we're going to stand maybe 12 or 24 months down the road? Are we seeing a really big earnings decline, and we're going to see an earnings recession, and maybe even slip into a fairly nasty recession here in the US and maybe even globally? Or is it going to be a no landing? What do you think about that, based on who you talk to?
Yeah, it's tough. So I feel like if we had an economy where people go into the store and buying lumber and buying stuff, if that was really what drove the economy, I feel like we would be in a much more severe earnings recession than the current situation. People are ordering stuff online, and they're ordering iPhones, and it's all services, it's subscriptions. And that slowdown really already happened in 2022 in terms of the earnings. And so you saw a lot of big tech companies, Google, Facebook, Meta, Apple, really cut costs, and so their earnings have actually gone reaccelerated, and a lot of that is due to cost cutting. So it's not like the top line has reaccelerated up. We're not in a boom, but and those stocks are, as you know, are such a large percentage of the S&P 500. I think Apple's like 7%, a single stock. That's larger than probably the entire materials sector in the S&P 500. And so you're seeing, I guess, Home Depot came out today saying sales are slowing, and they are lowering their guidance, or saying we might not be able to hit our sales number that we said. So that does not bode well. But I think definitely relative to expectations, earnings have been robust relative to expectations.
Expectations, right?
And confidence, when interest rates were at the super high level of 3% in the summer, people were making, very extreme recession calls. And the objective fact is that those calls have not come to pass, even with the bank crisis, bank tremor, whatever you want to call it. So the economy has held in much relative to expectations. And I'm not an expert on anything, but I do sort of know not where the wind is blowing, but what people think about what the wind is blowing, because I talked to so many people, and sentiment was very grim on the economic front in the summer. And at least with people I spoke to, the relevant economic data that has come out since then definitely has been less recessionary than the fears. So not great, but not as bad as sort of the worst fears.
And, this is why I love having this conversation with you, Jack. I know you've been basically podcasting since and having your own show, being with Blockworks and other groups in years past, but you've been doing this for the last 4 or 5 years, and you talk to so many great minds in the market. So my colleague Dale Pinkert, he does interviews every day for one of our shows, and he calls it intelligence gathering. I mean, you're talking to some of the best and greatest minds out there. So it's neat to hear what you have to say, because you're taking it all in throughout the course of let's just call it the week. I mean, how many people do you talk to throughout the course of the week? And I think it's pretty fascinating to hear what your takeaways are here. And speaking of which, I want to actually turn our attention to something that's closer and more dear to my heart as a predominant FX trader myself. I'm sure you've had so many conversations about the dollar, the de-dollarization of the dollar, but I've been hearing these conversations for a long time myself personally, and it's never really resulted to anything. And it's almost when so many central banks and so many countries try to deleverage themselves away from the dollar, it's like the tide goes out, you see who's not wearing shorts, and then everybody rushes back to the dollar. But it seems like also to me, in current days, that voice is a lot louder than it was 10 years ago or 20 years ago. So what's your thoughts, and what have you been hearing about de-dollarization?
Well, I think the guests who I've been interviewing have been on one side of the shop, that the narrative is kind of BS and it's overblown. I actually, for balance sake, I would like to have someone on who is a genuine believer in de-dollarization. The question is, what are you going to replace the dollar with?
Yeah,
you're going to replace it with another fiat currency of another foreign country. So not some sort of global IMF Bancor situation, not gold or Bitcoin. There's not enough gold. Everyone knows that. The Chinese yuan, okay, but they run a current account surplus. So, and they have a closed capital account. So there are some issues there. The euro, maybe. I mean, I don't know. It just seems like there needs to be some way more has to change that for the dollar to be replaced. Like to go from the sterling standard to the dollar standard, you had 2 world wars and a Great Depression. So I think it's going to take more than the volatile macroeconomic geopolitical situation that we find ourselves on May 17th, 2023. It's going to have to get a lot more volatile and bumpy, to use a word Jay Powell has been starting to use a lot, for us to go to a foreign a new foreign reserve currency. And I also will say, one of the first macroeconomic books I read was written in shortly after 2008, about 2010, 2011, Future of the Dollar. And you had very smart academics then predicting rapid de-dollarization, which has not occurred. And yeah, so I think it's one of those things that if it happens, it's going to happen very slowly. And it's not going to be the type of thing where, oh yeah, on February 1st, I was going through this company's financials and they released their earnings on February 4th. And I actually happened to be right, partly because I did my research, partly because I got lucky and I actually made a bunch of money. Like, it's not, this is going to be a type of thing where like people are going to have different jobs, different friends, a whole different life when this happens, if at all. I mean, I don't, in my lifetime, the dollar could still be the number one for my entire life. And that might even be my base case. So I feel like, yeah, it's big, but don't like make an investment that hinges upon the rapid de-dollarization that, like, if it doesn't happen soon, you're going to lose all your money. That was just like, that is investment advice. I don't give investment advice, but that is investment advice.
That's funny you say that. I mean, I can't tell you how many people I talk to, and the first thing that comes out of their mouth is the dollar's going to hell in a handbasket. I'm like, okay, but it's funny. It's funny, but not funny. But and I'm telling you, Jack, just from my experience, I've been hearing that conversation for ages and ages. And you're exactly right. What's the replacement vehicle? Is there one? We really do have a dollarized system globally right now. It's hard to see what would replace it. But over time, could central banks carry less dollar reserves and more reserves in other fiat currencies over time? I'm sure that is a trend that will probably continue for years ahead. But does it really replace the dollar? Yeah, I don't know.
Yeah, and if you have, let's say, what's right now an emerging market country like Brazil that pays 13%, and their economy is really strong, and you can sort of trust them, it might make sense to own that. If the dollar is paying, now the dollar is paying 5%, but for a long time the dollar paid zero, euro paid zero, Japan paid zero. So yeah, I ultimately think that money goes to where it's treated the best. And if you have someone paying you 13% who doesn't have a whole lot of problems, and you have a country that has a lot of problems that's paying zero, money generally will flow out. But history has shown that economic logic and financial logic, sort of common sense that I just laid out, does not always hold true. In the case of Japan, right?
That's so true. So true, Jack, and well said. All right. Well, I got to ask you this just because, you talk to so many people, and when you talk to folks, different experts in different parts of the financial industry, it's probably really easy for a lot of these shows, or maybe some of these interviews, to feel kind of downbeat, especially in today's economy. It's like, oh, we're going to be in a recession for such a long period of time, and you can probably say a multitude of things, but from your point of view, being at your age, and you've obviously got years ahead of you, hopefully in the financial markets, what are some of the things that you look most forward to and most optimistic about?
Let's see. Well, I'm optimistic about the labor market. I think it's been really strong so far and has defied the sort of doomsday prognostications.
Yeah,
and I think that's good. I think the economy is generally held in better than expected. I think it's good to get off zero rates. I think zero rates are necessary when you're in economic crisis, but clearly the economy can handle rates that are higher than zero. Whether it can handle 5% remains to be seen. I also think it is my base case, as it is the base case of many in the market, that we're probably headed for a recession. But I think in my lifetime there have been two recessions. In my adult lifetime, two recessions: the 2020 recession and then the 2008 recession, and those had very specific causes that caused very specific economic pain, broad-based economic pain. 2008 subprime mortgage crisis, packaged into all these securities that were of dubious value, vulnerabilities within the banks, the global banking system, and then 2020, obviously the pandemic. Even though that was a very short-lived recession, but very drastic, huge, over 10 million, 15 million layoffs, in a few weeks in the US. I think that this recession, I can't point to a single cause that will be. I think it was more of a general recession that probably exists more than 1990s and 80s that you're more familiar with, where it's just like, oh, things aren't booming as much, but it's not some sort of like economic nuclear bomb.
Right.
So that's, I guess that's, maybe a grim thought, but it's positive relative to sort of like expectation, I guess,
It becomes like, oh, it's cyclical. And I mean, it's it comes with the territory, right? You have expansionary periods, and then you have a period of, recession that we just trudge through and get through. And then, the grass is always greener on the other side as we get through it. Right.
Yeah, definitely.
Yeah. That's cool. Any other like positive takeaways that you have just in the financial industry in general? Like maybe like some of the adoption of cryptos and where people are seeing that go in the years ahead.
Yeah, well, I think that like with any new technology, the hype is the highest when prices are at their highest. And so I think you're seeing that with artificial intelligence now, that I am a little skeptical of. Like, I wouldn't call it a bubble, but I think that there will be a bubble in artificial intelligence. Like, I think in a year, there probably will be, SPACs of dubious quality, billion-dollar deals being priced with it's just a few college graduates in their garage. But I don't think we're there yet. But so I think the hype probably will get even higher on artificial intelligence, even though I'm just kind of naturally a skeptic of a lot of things. But so I think now the pain in the crypto world over the past year, I think has been a lot healthier for there. I think there are people who were working in crypto a year ago who didn't really like the technology. They were just made to make a fast buck. I mean, I don't know if the sort of language policies on your show, but I mean, there were like porn stars who were, I'm sure being paid to sponsor, meme coins that, everyone knows, including them, had no value at all. And that is, for the most part, does not exist. Crypto is a very speculative industry because it's so young, and speculation there, I would say it's still high now relative to perhaps traditional finance, but it is much, much lower than the peak. So I view that as a positive. And I think that I'm actually really optimistic about the company I work for, Blockworks. My show Forward Guidance, not focused really on crypto traditional finance, as I said, right. But I think that the company is run by and employs a lot of ethical people who want to make the world a better place and are very smart. And I just feel like, if crypto continues to draw people like that, I think there'll be a lot of good progress made. As people can probably tell, I'm not an expert in crypto at all, and like I'm a little bit in the weeds in like the banking sector and the Fed, a little in the weeds, not a lot. But when it comes to crypto, I really am sort of a generalist amateur. So I'm not a technology person at all. So I'm not on chain. Just I don't want to make it seem to your audience like I'm on chain, because I'm not.
It's funny. You're gonna get the comments down below in the comment section. Matter of fact, if you guys or gals have any comments for Jack, any questions for Jack, make sure you get down in the comment section below and ask him. Jack, I want to say this conversation's been great. It's enlightening. I love. I could probably sit here for another hour and just chat with you about things and things that you've heard. But I think what we'll do is we'll wrap it there. And I want to say thank you for being a part of this and the Trader Summit community. I'd love to have you back maybe as we approach the latter half of 2023 and see what some of the differing views that you've gotten from some of your people that you bring in. I'd love to hear from them and from you, obviously.
Yeah, I'd love to come back, Blake. I'd love to have you on my show. And I have to say, you're a great interviewer, but specifically, I feel like you have the skill of doing a short interview, which is a skill that I'm really not very good at, as you probably know.
Well, thank you. I got one. Woo! That's exciting. No, Jack, I tell you, hats off to you. And I really tip my hat to you because you do great work out there. Make sure you guys and gals check out Forward Guidance on Blockworks. You also have a podcast that's on Spotify, because I'm subscribed to your podcast there. Where else is your podcast located?
Yeah, so yeah, forward guidance airs on YouTube on the Blockworks Macro YouTube channel, and then released on a podcast on Apple, Spotify, and all the other podcast apps. And then on Twitter, I am Jack Farley 96, where I post about the podcast as well as just a few macro things.
Yeah, you do, and I love your tweets, by the way. So make sure you follow Jack. And Jack, I want to thank you really for being here, and I'll look forward to our next conversation.
Looking forward to it. Thanks, Blake.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.